Hello everyone, the rallying US stock market will take its cues this week from fresh inflation data, developments in the war in Iran, and a high-stakes meeting between the leaders of the US and China. An Iran impasse has the US100 hold steady, and dollar-yen and pound-dollar holding a cautious upside ahead of USDJPY and UK GDP data. This is your weekly technical outlook here at xm.com. Now let's get started. Let's start with the US100 index, which is starting the week just below its record highs, with AI-led momentum intact, but geopolitics and USDJPY now key tests for the rally's durability. The index is hovering just below its fresh record of 29,290, eyeing at resistance near the 200% Fibonacci extension level of this pullback from the January 28th peak to the March 31st low, near the 29,654 level. Now, a pullback from record highs could find support near the 28,340 level, which is the 161.8% Fibonacci extension, followed by this support band between the 27,000 and 27,500, which also encapsulates the rising 20-day SMA. Now, the momentum signals are stretched to the upside, however, reflect more of a pause to the current upside rather than an imminent reversal. Now let's also have a look at dollar-yen. Dollar-yen is holding above the 157 level as traders weigh USDJPY against rising Japanese intervention risk, keeping the pair range-bound for now. The pair has found strong support near the 156.40 level following the sharp pullback in late April from the 160.70 level to the 2-month low near the 155.50 level. Should it manage to extend this rebound, then immediate resistance might come from the previous week's highs near the 157.90. Followed by this area between 158.20 and 158.60, which encapsulates the bearishly converging 20 and 50-day SMAs, which could cap any immediate upside attempts. Now, to the downside, a break below this long-term ascending trend line drawn from April lows could then target the 155.50 level, and followed by the 155 psychological mark, which has been capping losses since late February. The momentum signals are reflecting this range-bound action for now. They're holding in negative territory, but are mirroring this intraday uptick for now, which is reviving some upside hopes as long as price action holds above this long-term ascending trend line, and also crucially above the 200-day SMA near the 154.40 level. Now let's also have a look at pound dollar, which remains range-bound near the 1.3600 level, with UK GDP, domestic politics, and global risk sentiment set to determine whether the pair can break higher or remains capped within this fresh consolidation between 1.3525 and 1.3625, which is an 11-week high multi-tested during the previous weeks. A break above this region is needed for a resistance near the 1.3715 area to be reclaimed, last touched in early March, and then higher up the multi-year highs from which this pullback occurred in late January. Now, to the downside, a breach below this medium-term ascending trend line and the 20-day SMA, which lies just tightly below, could then expose downside risks towards the 1.3465 and 1.3425 level, which lie just above the converging 50 and 200-day SMAs. A breach below this area could shift sentiment to the bearish side. Now, the momentum signals reflect this range-bound action for now, holding in positive territory, but flatlining, signaling the pause to this current uptrend. Now, that's all for today's market wrap. Thank you for watching.